Hello everyone, how's it going? Today we're going to take a look at Palantir, trading as PLTR. It's been generating a lot of buzz lately and it became one of the hottest topics in the market. So in this video, we're going to explore whether investing in Palantir is a good move right now, dig a little bit in its past performance, and peek at its potential future. But before we jump in all that, if you enjoy what you see and want to support the channel, please remember to like, comment, and subscribe. Also check out the affiliate links for the gear I use to create content like this. Even if you're not shopping right now, bookmarking these links for your future purchases can help me out through a small commission without additional cost for you. So thank you very much for your continued support, and now let's jump right into today's Palantir video. So Palantir is currently trading at a relatively lower price level from where things stood just a few days ago. And this is mostly due to profit taking and a small difference with the consensus among the institutional shareholders, in other words, the expectation and the actual results. They were good, they were positive, but the expectation was even more positive than that. So looking at Palantir's history as a publicly traded company, the stock hasn't always been on the upswing. Yet, the past 5 months have been very different, with a very remarkable upsurge catching the market by surprise and also catching the eyes of both investors and newcomers. So its year-to-date performance has been impressive, increasing by almost 83%, which outperforms most tech giants like Microsoft, Google, Amazon, and Apple. So the big question right now is, can this momentum keep rolling? Now, like I said in the beginning of the video, in terms of price action, it seems like this momentum is now taking a break. It at least wants to take a break before people restart thinking about where they want to go. So, with Palantir reporting the Q2 earnings, I think that the company's valuation is something that we need to think hard about. So in Q2 of 2023, Palantir's revenues was around $533 million, marking a almost 13% year-over-year growth. Looking forward, the Q3 revenue guidance is around $553 million, with a stable outlook. So, considering that their market cap is around $38 billion, the full-year revenue projection should be around $2.2 billion, which is very remarkable. However, when we delve into the valuation metrics, things get a little bit more dicey. The stock's price-to-sale ratio is approaching 15, which signals a relatively high valuation compared to the growth rate. Looking ahead to 2024, the price-to-earnings ratio might hover around 70, which means that the stock might be overpriced relative to the growth prospects. Now, if we take a look at the financials, Palantir has impressive numbers. They are able to control very efficiently their operating expenses while still growing the revenue. The efficiency points towards effective scaling for the company are pretty good. So, with that being said, a quick word regarding the chart itself. There are essentially two types of shareholders. People who have bought in around the mid $20 range. And these people are just trying to break even. And maybe potentially creating some sort of resistance as well, which we now have seen has indeed created. And then the recent rally might also lead to a correction, which can also affect stocks like Palantir that has risen quite a bit. Considering all those factors, I would say that the company has upside potential, but there are also short-term limits. The best case scenario is a return to prior consolidation range, like between 25 to 30% increase from current levels. But the stock's valuation and the potential to market corrections do imply possible downward pressure. So even if Palantir has shown revenue growth and cost efficiency, the valuation and the potential influence of early shareholders looking to exit could indeed impact the path ahead. So it's very important for us, the investors, to weigh those factors in and to consider, is now a good time to buy Palantir, right? So uh, this has to do with your risk profile. It also has to do with the existing exposure. And then, only then, we look at the chart, we look at the fundamentals. Right now, the market has overbought a little bit Palantir, so it might be the best to wait a bit before re entering. So, right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. That being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions instead of choosing ETFs. So, overall, I think that Palantir has a promising future, but we should definitely anticipate the occasional significant corrections influenced by the broader market trends rather than just the company's own fundamentals or what people think about a company's fundamentals. That's why I would suggest to reserve a substantial portion of your investment for the future when turbulent times have likely subsided. Palantir is probably resilient enough to handle the bear market. The stock value, though, might go through multiple rounds of adjustments before becoming stable once again. So this is why I would say that patience is key in this case, and that we should treat Palantir as a long-term late blossomer.